Hello, I'm Tim Beggins, president of Elk Trading Company. In today's midweek natural gas report, natural gas prices are up strongly, currently trading for the July spot contract at 396.20, up 11.1 cents or 2.88%. Taking a look at the daily chart, we've busted above the upper Bollinger Band resistance, which was at 391.70. The daily Bollinger midpoint is at 366.30. So looking at the hourly chart, let's take a look at the pivots. The pivot today, we've got pivot resistance at 397.80. We've actually hit exactly that number. And above that, we have pivot resistance at 407.60. So let's take a look at what's going on for the front to back spreads. The front to back spreads are coming in as expected with the summer heat and humidity. It's broken down through the trend lines here. And looking at the Jan versus July contract, as you can see, we've broken solidly below that trend line as indicated here today. Looks like right now we're down 5.4 cents to 125.40. So we did get in our resistance level area of 130 to 140, took some profits up there, and looks like it's coming straight back down. Same thing for the Jan versus the October spread. Currently, right now, down 3.3 cents or 1.11.8. So $1.11 and 88 ticks, excuse me, down 3.3 or 2.87%. Still, again, the RSI is declining, so it is confirming that the move is still for the contraction going forward. Let's take a look at the weather. The 8 to 14-day temperature outlook above normal around the mid-Atlantic and New England states. And this is going to be very important because let's take a look at the heat risk. Today's heat risk is around North Carolina. But as we go through the daily numbers here, you can see it starts to get even hotter in the upper Midwest. And this becomes major for heat risk index here in Nebraska, Iowa, South Dakota, and down through Kansas. As we go through this forecast period into Saturday, this starts to encompass things like Chicago, all the way down through Tulsa, and maybe even down toward Dallas. And then this continues. This is now into the extreme heat risk around Chicago all the way down to St. Louis. Getting into Monday, this starts to push even further east. And then it takes over from all the way from Chicago over to New York and towards Boston. So the heat and humidity is finally taking its toll with Friday, the first day of summer. In the tropics, nothing is expected for the next 7 days. I'm tripping on that one pretty hard. As you can see, the global risk for tropical activity is in the Pacific around Manzanillo in Mexico. And that is exactly the case with Hurricane Eric. Hurricane Eric is pushing out toward Acapulco and Zihuatanejo. Yes, the Shawshank Redemption town. And that is expected by Friday. But for the Atlantic, it's quiet. Why? We still got the Saharan air layer. It's still pushing dust off of the Sahara, pushing it all the way back into the Caribbean. This is going to inhibit any kind of tropical activity in the Atlantic. Let's take a look at our stocks. This is the oil and gas E&P sector. Market cap between $2 and $10 billion and a short float at least over 10%. As you can see, these stocks have done fairly well throughout the week. If we push this out toward 20% for short float, only two stocks out of this list come up, which is CNX and Comstock Resources. So let's take a look at how they've done for the week so far. And as you can see, these stocks are all in the green. Comstock up 22.7%. That's the winner so far this week, with Apache coming in behind it just below 8%. But our laggard here right now is MGY. Magnolia Oil and Gas only up 2.84% on the week. So let's recap here again for the July contract. Currently trading at 396.80, up 11.7 cents or 3.04%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.